Welcome back. You're still tuned into Midcap Masala, and Nifty is now nearing that 26,150 mark. So clearly turning out to be another good day for the Indian markets. But let's now put the spotlight on Black Box, and the management is joining us from the sidelines of JM Financial Conference. Mr. Sanjay Verma, Executive Director and Chief Executive Officer at Black Box, is now joining us. Mr. Verma, morning, and thank you so much for joining us today. Let's talk about revenue growth for the company. Second quarter was very solid, 6% YOY growth. If you can take us through what drove that growth and what prevented further margin expansion in the second quarter, and now going forward, most importantly, what is the outlook for the second half of the year?
Key drivers for the growth, of course, has been our consistent growth in order backlog. So I think, as you see, I think we have clocked, we have been growing our order backlog over the last couple of quarters. The momentum is supposed to grow further. So I think we are now able to deliver some of the projects that were slightly delayed. There were some issues pertaining to tariff. So delivery and execution combined with our order backlogs, I think was a combination factor with respect to our higher growth. With respect to our margin, we expect the margin to, I mean, we want to grow 10% margin. We are about 9-ish at this time. We expect the margin expansion as we start to scale from here to head towards more 9.5 and 10 as we move forward. So we are on track for that as well.
Right. And Mr. Verma, let's talk about the order backlog, which currently stands at 4,846 odd crore rupees. How much of this is expected to be realized in quarter 3? And if you could break down the expected timeline for realizations from this. Also, if you are still on track to achieve your full year guidance of $1 billion.
Yeah, so I think we give a backlog at a point in time looking forward. So of course, the backlog has grown to 4,800 crores. And if we work backwards, that we are expecting a 12 to 15% sequential growth, right? So we are at track of doing that. The way it works is that we have a backlog. We would have a booking again for this quarter, which we expect to be much larger than the previous for the first half. A combination of a backlog and additional booking we're expecting to accelerate will allow us to deliver the Q1Q growth that we're expecting in quarter 3. Your other question with respect to our guidance, we are confident of our guidance for the year. That we've given about 6,700 crores. So we are tracking with our guidance at this time at the back of higher momentum in the second half.
Okay, so you're expecting higher momentum in the second half. But Mr. Verma, the Wind River partnership is also expected to generate about 1,350 crore of revenue over the next 5 years. What is the revenue ramp-up profile, and how will you be booking this total revenue over a period of 5 years?
So overall, it's a 5-year deal, as you rightly said, 1,350 crores. That translates to close to about $30 million a year, ballpark $32 million. We expect the revenue to start to become accretive to us starting in Q4 with a smaller revenue in Q3. So the average revenue ramp-up expected is 30 million a year, so the close to $7 million. So we expect the ramp-up to starting Q4 going forward, and to peak up over the next 12 months of 4 quarters to an average of $7-8 million every quarter, hitting a benchmark of $32 million. And that gives us a 5-year run of about 1,350 crores. With respect to margin accretive, I think apart from the sale of licenses and support, we expect this is also an initiative for us to launch ourselves into a platform and virtualization business that opens up a massive TAM for us going forward. So, and we expect it to be margin accretive as well with respect to both gross margin and EBITDA margin going forward.
Right. And Mr. Verma, given the sentiment around AI in the broader market right now, what kind of traction are you seeing from data center related deals?
So I think we're seeing a lot of traction. I think Black Box, especially in North America, we invested heavily in our data center teams, both from go-to-market and from operations perspective. We are currently engaged with a couple of hyperscalers that we work for, but I think we are also now engaged with few hyperscalers that we were not engaged earlier on, with some serious conversation pertaining to new build-outs. The total build-out expected from both existing greenfield being rewired to AI and newer projects is massive over the next 3-4 years' time. As you heard more recently, many more announcements have come through. So we are seeing good traction. We are participating in large deals. We expect several multi-million dollar deals running into $50 and $100 million as well over the next couple of quarters as we move forward. That will augment us with respect to our order book. The project execution cycle for large-scale, hyperscale data center projects are long-term, but then we are currently focused on building our order backlog, building our order books to be able to give us the growth momentum in fiscal 26 and 27.
Okay, and Mr. Verma, let's also talk about EBITDA margins. Are they sustainable at that 9% mark and PAT at about 3.5 to 4%?
Yes, so I think our EBITDA margin goals are about 10%. We are currently tracking at 9%. So we are, the margin is not only sustainable, but we believe that we will be accretive to our margin. As you've said, I've gone public by saying we are looking at growing this organically about 15% and of course doing inorganic to go to our goal of $2 billion over the next 4 years' time, and that would lead us to about 10% margin. So we are on track as we scale up from here to push the margin up from 9 to 9 and a quarter, 9.5 and beyond to go to 10%. From a PAT perspective, we are guiding for the current year about 3.84%. We believe at scale we should be able to deliver about 6-7% of PAT margin at scale.
Okay, thanks for that perspective, Mr. Verma. On that note, we'll let you go. So that was the management of Black Box talking to us about their financials and the growth ahead. But on that note, we're completely timed out on this edition of Midcap Masala. It's a goodbye from Ashesha and me, but stay tuned to ET now for more news and updates.